Thanks for tuning into India Market Close, and it's a heavyweight supported day today. If you look at the Nifty, it's flat, but the reason it's flat is because of the kind of contribution that the likes of HDFC Bank, TCS, etc. are making. We'll get that in a moment. Let's just mark the Bank Nifty and the mid caps and small caps. Bank Nifty would be in the green, margin in the green, courtesy HDFC Bank. Mid cap and small caps, which have been under pressure for the last few days. And today, mid caps particular are down about 1.6% because they were otherwise okay. Small caps continue to go down. On the 5-day period, the kind of underperformance that the small cap space has had vis-a-vis the Nifty is something to speak about. Nearly 5% down for the small cap space relative to almost flattish performance for the Nifty. But bring up the index movers and you will see right up here, HDFC Bank. All right, the contributors, HDFC Bank, TCS, and a bit of Reliance and Infi. But mainly it's these two which are helping the index stay afloat on a day wherein a lot of others have corrected quite a bit. So SBI, Adani Enterprises, Tata Motors, all of these have looked wobbly in addition to ITC, of course. And just the heat map will give you a sense of the kind of fall that's happened. So look at it. The index is in the green, but overwhelmingly a lot of stocks in the red and a lot of stocks between 2-2.5% down in trade today versus just 2 or 3 names holding out, namely HDFC Bank and TCS. FMCG, must say, has taken it on the chin. But the broader markets, Tamanna, and a lot of pain yet again.
Absolutely. You know, I would say that when you're seeing the Nifty and the Sensex flat this afternoon, Niraj, is hiding the real pain that people are feeling, their portfolios are hurting and the markets are feeling. That sentiment has turned negative, and there you have it, the Nifty mid cap 100, but I would pull up the micro cap and the small cap indices as well to give you a better sense of how deep those cuts are. So, you know, look at that. The Nifty small cap 250 down 2%. So between 1.5 to 2.5% cut on all of these counters as you have it. Let's take a look at what's hurting. Swan Energy, one of them. Big loser today as well. So there's been a block deal of about 1.79 lakh shares. That could be one of the reasons, but there is a bit of legal hangover as well. They have a joint venture with IFCO Tokyo, and as a minority shareholder, the court has directed, that Swan Energy address concerns of IFCO Tokyo. So that's one of the reasons, perhaps, that you're seeing a 14% cut on this. Paisa Low is another one, and this is an intriguing story from all angles. Paisa Low Digital was running high, down 19%. The Delhi High Court has directed that RBI look into allegations of unfair lending practices by Paisa Low Digital. Paisa Low has come back and said, we've not received any order. What do I mean by unfair lending practices? The allegation is that they were giving loans at the rate of 125% per annum. That's the interest rate. So much more to this story, perhaps, than meets the eye. India Mart is another one that you should talk about, and in the positive because of a Jefferies note that has maintained a buy with a target price of 3,400 actually for India Mart. So they see some room to grow. IIFL JM Financial, I found interesting only because the regulatory overhang, notwithstanding, these counters have been up in the green, of course, pared down from their day's high, but in the green nevertheless. And the other ones are the real estate stocks. These are the big losers of the day, I would say. So Prestige, Macrotech, DLF down 4.5%, nearly 5% at some point in trade. These are the big pockets of pain. The exceptions, Niraj, today being HDFC Bank, which is in a different trajectory altogether. So HDFC Bank, ITC, those big talking points of the day.
Yeah, from a newsmaker's perspective, most certainly. And since ITC is that big talking point, let's try and get some perspective here. Of course, it's reacting to the news of British American Tobacco planning to sell up to 4% stake in the company. Mahima has more details on this. Mahima.
Right, Niraj. So, BAT has confirmed that it is reviewing the possibility of stake sale. Now, if we talk about how the stake sale will take place, where around 4% stake will be sold by BAT. At present, they hold around 29%, so their stake will come down to 25%, and the sale will be valued a little over 20,400 crores. And the 4% consists of around 49.9 crores of equity shares. The timeline of stake sale may change based on the market conditions. Yesterday, also, ITC did witness a block deal of around 12 million shares, where around 0.09% of the total equity exchanged hands. Now, the reason for stake sale that BAT has given in their recent earning calls is that they want to improve their financial flexibility, they want to enhance their balance sheet, reallocate their capital, and they've been trying to reduce their debt. Also, there was a Jefferies note on ITC that came out, and they've said that BAT stake sale in ITC, it is approximately 30% nearly of its own market cap, and so far it has resisted parting its stake because the FDI laws in tobacco do not permit a foreign strategic company now to invest in tobacco companies. Considering all of this, if the stake sale happens, with respect to ITC's play out in the Nifty, ITC currently holds a free float weight of around 0.71%, which will go up to 0.75%. And in terms of point contribution, at present ITC's weight is around 3.71%, which will go to 3.94%. So passive funds might have to recalibrate their portfolio to match the index weights. So this is what we have so far on ITC.
So ITC, the interesting stock over there, you know, British Tobacco also wanted to come off and exit some of its stake in ITC because of the regulations over here. And that is the reason that they're also exiting. So a bit of pressure over there on the stock, but fundamentally nothing really changes. I just want to pull up Godfrey Phillips and see what's happening. Wild gyrations in those stock, in that stock last couple of days, and today as well, about 10% down. Vaishali Parekh now with us on the show. She's Vice President Technical Research at Prabhudas Leeladhar. Vaishali, very good afternoon to you. Great to speak with you today on the show. Let's begin with your take on the indices, Nifty and Bank Nifty, and what we're seeing there. Nifty holding all right. Real pain in the broader markets today, though.
Very good afternoon, and thanks for having me on the show. Yes, exactly. So since yesterday, we are seeing that market is not sustaining at higher levels. But having said that, we still have support on Nifty. We have a support at 22,200, and Bank Nifty 47,000 acts as the final support. So as long as we are holding on to these support levels, I think it still is a buy at every decline, but it should be totally stock specific and the disciplined trading that I would recommend from here on.
Okay. So Vaishali, good afternoon, Niraj here. So the ones that you're thinking of buying, are you looking to stagger them out starting today, or are you waiting for lower levels?
Well, as I said, that we are close to the support levels of 22.
Okay, so you're buying it out now.
Yes.
But staggering it out, I presume. You're not buying everything at one go.
Well, I will be a bit conservative. I will not go all out, but calculated risk. Yes.
Okay. So can I first get the stocks out of the way before we talk about some of the key suspects? What are the recommendations for the afternoon?
So I like Tata Communication for now, because that, in spite of all the choppiness, it is holding on very well and it is in momentum right now. So, well, I'm looking at with a support of 1900 as a fresh buying opportunity. 1900 should be the support level, and I would look at a target of 2100. And the other one which I do like in the cash segment is HEG. Since 2 days, we are seeing that it is picking up momentum and it is showing good volume as well. So currently at 1800, and we have also recommended to our clients. So with a stop loss of 1650, I would be recommending the stock for a target of 2000 to 2005. So these are two stocks to my liking right now.
Okay, so HEG, one of those picks, and Tata Communications the other one for Vaishali. Vaishali, what are you making of the real estate pack? Bout of weakness there, led by, I would say, DLF, Macrotech. A lot of these, some of these companies looking to raise funds. QIP is up in the offing. But anything here which you would be constructive of on the charts, which seems like an opportunity to buy?
So currently, first let's see the realty index. It has corrected, but as long as the trend is concerned, it is still intact. If we break today's low, that is 870, that is where we are right now. If we break today's low, then that would call for a further corrective move. So in that regard, I would still like DLF from these levels, because it's quite in sync with the way the realty index is showing. So I think DLF could be a good trading strategy with a stop loss of 850. I think the stock can bounce back to a target of around 930.
The other thing that happened, and not that it has a large consequence on the trading fraternity, I presume, that NSE has announced that they are reducing the transaction charges for equities and derivatives by 1%. So 1% reduction in pricing may not necessarily have a dramatic impact for, viewers who are traders. So that's not very large. It will be effect from April 1st. But what this has done is impacted BSE. Why? That statement on your screen, that for BSE in the Q3 numbers, the transaction revenues were up 69% quarter on quarter and 150 odd percent YOY. So that transaction income for BSE, even on the derivative side, has increased quite substantially. Now that NSE is doing what it is doing, it clearly brings about fear about this revenue is coming off. And as a result of which, I think you see the BSE stock today, that stock has come off. It's down about 5.5%, and it refuses to budge from those levels. It's just kind of staying steady lower at about 2,100 or slightly lower than that or thereabouts. Vaishali, any thoughts on this stock, BSE?
So I would say this is one of the trades, what we have seen today, that it has broken the long consolidation and it's gone below. But still, I would say 1900 should act as a good support, 1980 to be precise. So 1980, 1950 should act as a good support level. If these levels break, then it is a cause of concern, and that would trigger further selling coming in. So till then, well, let's wait and watch.
Okay. We'll talk more about what this means for BSE and, the impact at all, sentimentally, if there is one, not being seen in the markets right now, to be honest. But more on what it means for the BSE stock price and valuations after a very short break. Stay tuned. We're coming right back. welcome back. You're watching India Market Close, and it's not the easiest day for the markets. I would say it's the broader markets where all the pain is. Your Nifty Sensex is looking all right, but your real estate stocks are hurting. Your pharma stocks are also hurting today, and definitely in your broader markets, your mid-cap, micro-cap, small-cap, there is a bit of pain. One stock which has seen a bit of flight in the last half hour or so is a Jet Airways. Yes, it has emerged from, I don't know which corners that Jet Airways stock has emerged, but it's at a 5% circuit right now. And the reason is that the NCLAT has given a clearance to Jalan Kalarok to actually run the airline. Now, they were the only bidder left, the last man standing, so to speak, to take over the moribund airline. One of the key creditors, a consortium led by SBI, actually was fighting the conditions of this in court, essentially what Jalan Kalarok would end up paying and to who, and the size of the haircut that the creditors would have to take. But this one bidder has prevailed. Will we see Jet Airways up in the air soon? We're going to have a conversation on that ahead. But for now, let's take a look at other stocks that are buzzing in trade. Anushi joins us with more. Yes, Anushi.
Right, Tamanna. So in today's list, right at the top, we have Linde India as the top volume buzzers with about 18 times its 30-day average. Now, no fundamental drivers as of today, but if you have to look at its latest update on Feb 29, the company did say that it had acquired about a 24% stake in Genatrix Renewable for 41 crores. So that remains on watch out. This is in line to increase their renewable capacities going ahead. Now, moving on to JTL Industries, another straight day of pain for this company. This is after ED's investigation had revealed that Tibrewala is involved in the money laundering case, and he holds a percentage of stake in the company, so it is facing some pressure for the second day as well. Next on the list is Devgi Turk Transfer. This is a newly listed company and is in focus after the anchor investor lock-in period had ended, which released about 36% equity. So the stock is seeing about 11 to 12% of an intra-day low today. Now, next on the list is United Breweries Limited. This is an interesting pick. If you have to look at the whole FMCG pack today, not much of an action over here, but this isn't trading in the positive territory. About 3% of gain here after the company has launched a new product in the Goa market, a new brand over here. So that remains as a focal point. And lastly on the list, we have India Mart Intermesh. This is in focus after Jeffrey maintained its buy rating after post investor feedback. So a couple of reasons they have cited that they expect the paid subscriber count to increase to about 6,000 from 3,000 it currently holds per quarter. Also, it has indicated on a strong delivery going forward. But on the concerned side, what remains on the focus is its execution challenges. So these are the top 5 buzzing in terms of volume for today.
Thanks a lot for that, Anushi. Some good info into some of the key buzzers. Now let's get in some perspective from Rahul Malani. He's DVP of Fundamental Research at Share Khan by BNP Paribas. Johnson right now to talk about the impact of NSE cutting transaction charges on BSE, because presumably BSE, at least the market may believe, might have to follow suit. Rahul, would BSE have to follow suit? And if so, what's the kind of per percentage impact on BSE's numbers?
Good afternoon, first of all.
Very good afternoon.
As the derivative segment is concerned, BSE charges are already at a discount to NSE at 35 to 40%. So apparently in the derivative segment, no impact is there. But sentimentally, it is a negative because BSE wanted to increase the charges on the derivative segment after a sustainable volume is built up, which they wanted to build in equity derivative segment right on the non-expiry day. So the date for increasing the charges in the derivative segments may be deferred slightly. But as far as the cash segment is concerned, BSE was already at a premium to the charges, but company would not indulge into decreasing the charges because there is less churn in the cash segment versus the derivative segments. So a neutral read through. And as far as the volumes are also concerned today, if you look at the average 30-day, if you look at the last 30-day average volumes are very, today's volumes are 50% of the of the average 30 days volume in the last 30 sessions. So this is the normal profit booking which is happening in small and mid cap space.
So Rahul, you don't believe that because NSE has done this, even though BSE's numbers were lower, but because the differential is now lower as well, that BSE, in order to retain its market share, might have to reduce the charges that it charges?
So that is why I mentioned that in cash segment, churn is lower.
No, but derivatives?
So, on derivatives, it will take time, but once on the non-expiry day, a sustainable volume is build up, is seen on the BSE platform, then only it will be increasing the prices, which was seen in the Sensex contract also. But in the near term, I do not see that BSE would be increasing the charges.
Okay. So that's in the context of BSE specifically. Rahul, hi, good afternoon. Tamanna here. I want to simply understand that while this is sentimentally perhaps positive, does it make a real difference? For traders, for brokers, the fact that NSE has paid those charges, what is the material impact?
So as far as the company is concerned, there is no material impact. But overall, if we look at the broker space, it will be positive impact for them because the charges which there was pressure in the broking charges. So ultimately, they would have to their yield will be the compression in the yield will be lower.
So is it a positive, for example, for an Angel One or other in that spaces?
It will be positive for brokers. It will be more positive for brokers.
Okay, so we'll see if there's any impact on
because there is
stocks.
A lot of churn.
Yeah. All right. So impact is positive for brokers. Right now, sentimentally, you're seeing BSE react, but Rahul Malani of Share Khan says no real difference at the end of the day. Thank you for that, Rahul. But then let's come back to what's happening in the markets over there, and where you are seeing some sort of a pain point. And I just want to pull up what's happening in banks this afternoon, because you're truly seeing a bit of a slide over there, apart from, I would say, HDFC Bank. HDFC Bank is that outlier, but especially your public sector banks are seeing a second day of a hit. And I want to come to Vaishali Parekh on this. Vaishali, in the last few days, of course, public sector stocks overall are seeing profit booking bound to happen after the kind of run-up, but public sector banks sentimentally have also seen a bit of a turn. Perhaps overhang of the electoral bonds issue, I'm not so sure. SBI down about 2% this afternoon. They have to disclose all their numbers of who bought and who received electoral bonds by the end of closing day, business day today, so maybe in a few hours. But anything over here that you think has the possibility of recovery, or you would stay away, Vaishali, from this entire pack?
I think I would stay away because, first of all, as you said, it's really run up. And the index on the whole right now, it is at the support level of 7,000. So if we see further on selling, then of course, we will be seeing some more pain coming in SBI, PS, PNB, etc. So I would say rather now focus should shift to the private sector. And today, as we saw that, yes, HDFC Bank, along with that, even Axis, IndusInd, they all look good to me because they have really not participated. So I would say that, yes, risk reward wise, these are the banks which should be looking.
Okay. Well, the other aspect is the kind of cracks that we're seeing in FMCG by and large, Vaishali. Any thoughts here? I mean, ITC is one thing, but beyond ITC, the Nestle's of the world have come off. Nifty FMCG is down about 1% today. Any thoughts here?
I think there is still some pain left because I'm not seeing any reversal on the chart as well. Nestle, as you said, yes, it's showing signs of bounce back. In fact, even ITC, if you talk about it, till yesterday, it was just coming out of the consolidation. And today, with the news you are seeing, but well, as long as 395 levels are held on, I think ITC would be still a fair play because the view gets negated only below 390. So till then, I would say that yes, ITC could do well. But otherwise, I'm not much to say because even Hindustan Unilever, if you see, it's just breaking the trend. And so also is the case with Colgate. I mean, we're not seeing any convincing rally coming in from these sectors. So, well, let's wait and watch.
Okay, let's wait and watch. Let's take a break. We take a quick one, and on the other side, get you some top BTST ideas. Talk about Jet Airways, which is clearly a stock in focus today. Back with India Market Close right here on NDTV Profit. Let's get a sense of what's happening in the derivative space. Agam is standing by with the details. Agam, How are the markets looking on the derivative side?
Yeah, well, it's been a very, very confusing one, at least for those who are looking at the Fin Nifty expiry. But I'm going to come to that in a bit. Let's start by taking a look at the Nifty. And it's not without, it's choppiness that we've seen in there. That said, we're still looking at flattish moves, and the Nifty maintains around 22,300 and about a 1.5% increase in open interest, but not a substantial amount. As far as the Bank Nifty goes, again, the moves on an intraday basis were a lot more volatile. And while we didn't have too much in terms of an addition in open interest, well, the index itself also remains flat. But what is really most interesting today is the intraday view chart of the Fin Nifty. And the reason I bring it up is because of its intraday options expiry. Now look at that. In the first half of the session, we see a sharp up move. All right, that's where you see all the call writers taken out of the equation, all forced out into booking their losses there. And in the span of another about 20 odd minutes, you see a sharp drop, and that's where you see all the call writers taken, rather all the put writers taken out of the equation. Since then, everyone who would have potentially betted on a flat move would have completely been taken out of the system. But since then, we have in fact seen flattish moves for the Fin Nifty through the course of the day. It's been fairly quiet. So, it's been no one's market. It's been no one's expiry. It does seem like that, at least from the seller's point of view. And in fact, even in terms of buyer's point of view, we really haven't seen as much traction. So it's been a kind of a very, very tough one, at least as far as the Fin Nifty expiry goes. Now, let's talk about the options market in terms of the Nifty 2. Let's pull that out. And, we are looking at consolidation, which means that 22,400 is where we saw a little more writing in terms of calls as well as puts, as you can see on your screen there. And, of course, your overall open interest distribution, the kind of range that we've seen, that doesn't really change. Let's pull up the overall open interest distribution for the Nifty. That should come up. And, 22,500 continues to be, strengthening of sorts in terms of that kind of resistance on the higher end. Of course, we spoke to a handful of analysts, and they suggest that 22,700 could in fact be a good amount of resistance. So this is a 200-point range. We are expecting the Nifty to see some amount of resistance coming through. On the lower end, continue to keep an eye on 22,200, which seems to be a pivot of sorts. And of course, in terms of the Fin Nifty, again, I've already spoken about the level we are most likely to see it expiry around, in between 20,900 and 21,000. Finally, coming down to stocks, let's pull that up, and we're talking about, Oracle Financial Services in India Mart looking at longs, shorts for Nalco and Dr. Lal PathLabs in terms of stocks which are seeing unwinding, short covering for ICICI Prudential and HDFC Bank, and ABB, Shriram Fin, and Cummins looking at longs unwinding. Overall, a nothing sort of a day, at least as far as benchmarks go at the moment.
Well, definitely not a nothing sort of the day as far as the broader markets go. But thanks for that, Agam. Talking about HDFC Bank, that's having a pretty good day after getting beaten down. And at an interesting time when the mood seems to have soured on public sector banks led by an SBI in that sense. And HDFC Bank up 2% is quite an interesting move, and we'll get more in on that. But Dharmesh Khan joining us now. He's head equity research at Chola Securities. Dharmesh, very good afternoon to you. Let's start by understanding what we're seeing in terms of a crack in the broader markets. Do you see this sustaining as far as the pain is concerned? Or is this also a time to refocus on quality counters, even in mid and small cap space?
Yeah, good afternoon, Tamanna. See, mid and small cap space was always a quality focus kind of pick and choose portfolio. It was never a border market kind of a game. So, I mean, that selection should always be there whenever you are dabbling in or going in for investment for any company which is small in size and likely to grow to a bigger size. So that's the only mantra to make big money. However, the action which we have seen over the last 1 month or so it's been most of our skinning is being done. I mean, huge profit taking is happening out there, and the news flow surrounding that space, particularly from the regulator, is also not very, encouraging. It does create a doubt or a fear in the minds of the people who are stuck, and a huge money was also being made for over the last 1.5 or so years. So, profit taking is happening as of now. So that color is likely to stay for some more time. I don't think, going by the earnings which they reported for the Q3, I was seeing the aggregate of last, 201 to 500 market cap companies. So there the earning growth, if you remove the loss to profit kind of 8-9 companies, it's hardly 1%, 1.5% is the earnings PAT growth. So that scenario is very dismal, and more of it was only coming through your operating profit margin leverage which these companies enjoyed because of tailwind of low commodity prices. On top line growth also, there's 1.5% kind of a top line growth. So that does not account for 30-35 kind of a P multiple which these companies enjoy. So I do think this pain is going to stay for at least 2 more quarters.
Pain is going to stay for 2 more quarters. The question is that where do you redirect at this point? And Dharmesh, just a follow-up for you, where we're seeing some defensive play in pharma. Cipla, by the way, making some sharp downward moves. Brokerage notes also adding to the pain, perhaps. But would you look at any of these pharma counters now for a midterm bet, Dharmesh?
Yeah, from midterm perspective, I mean, if you're just playing for 3 to 5% kind of a trading pop-up, so if you can time it a bit on the low side, it is the money is there on the table to be taken. And the companies in pharma space, which looks a bit attractive to me, as one is Dr. Reddy's. So that looks quite promising, along with Cipla. So these are the 2 counters where one can look at from trading point of view. But I don't see a structural up move in any pharma company from here on. The bulk of the heavy lifting up move has already happened, and here they are, fairly to richly valued kind of a multiple. It's just that market is gyrating in a range for the last 1.5 months or so. In fact, for CY24, this has been a trade. People are resorting to defensive companies and the space like pharma, but fundamentally, they are richly valued now.
Dharmesh, after a brief interlude, the Inox Winds and the Suzlons of the world have started correcting yet again. 2 days on a trot now. Inox is down another 5% today. Suzlon is down as well. Would you bottom fish here, or would you believe they'll settle at lower levels?
Niraj, if you are looking at these companies for, say, very long-term perspective, 5 years or so kind of a perspective, which the power sector is now up for, then there's no need to do bottom fishing. One can start, buying it in a staggered manner. Staggered manner is the approach which we have been recommending to our clients from here on till the time, the entire elections are through. But I do think there's still space for them to fall because this culmination which has just started, melting off most of the companies on the profiting play is likely to stay here. I'm expecting, I'm putting it on record, I'm expecting around 5 to 7% kind of an index correction in a very short span of time.
Okay, I just want to get Vaishali's view also on some of these counters we spoke about, Vaishali, and I'm keen to know, your take on Jet. We're going to have a deeper dive in just a bit on, fundamentally what this changes for the aviation industry, for Jet Airways, etc. But on the stock, considering the sharp move that we've seen right now at 42.79, would you look at this in any way?
Well, I would say that yes, actually, if you keep a stop loss of 39, because totally in deep oversold, and right now the charticle, the candle that we are seeing is showing that there is something really happening, as you said. So with a stop loss of 39, this stock can be considered first for a target of 50. If it sustains above 50, then yes, 55 and so on. So, well, for a trading target, I think it is at a very attractive level with stop loss of 39.
Okay, so that's at least on the technicals on Jet, but let's understand the story in a bit more detail. So what's happened is that the NCLAT has approved control transfer of Jet Airways to the Jalan Kalarock Consortium. Vishwanath Nair joins us with more. Vishy, this was perhaps not the best news for the creditors, led by SBI, I believe. who were trying to wrangle out, I would guess, less of a haircut from whoever takes over the airline.
That's right. So, Tamanna, essentially, January of 2023, that's when the NCLT had actually approved the transfer of control to Jalan Kalrock after they were selected as the highest bidder in the Jet Airways case. Now, since immediately after that, a few days later, lenders led by State Bank of India approached the NCLAT opposing that decision, saying that this Jalan Kalrock consortium has not paid its dues on time, and unless they pay those dues, the company should not be transferred to them. Now, of course, the fight has been going on for a very long time. Part of the original 350 crore that they were supposed to pay have been paid during this one year, 2 months or so period that has passed since then. There's a 150 crore amount that's still pending that Jalan Kalrock has to settle with the lenders. For that, there was a proposal of a corporate guarantee given that was objected to by the lenders, saying that corporate guarantees are not real money. So there's that entire fight that is still continuing. But remember that NCLAT at this point in time has ruled against the lenders, but this is obviously not the end of the whole saga, because unless the Supreme Court takes a final decision, it's widely expected that the lenders will end up at the Supreme Court challenging this decision of the NCLAT. And unless the Supreme Court says whether the company goes to Jalan Kalrock or not, you're unlikely to see sort of a resolution to the entire problem that's going on at Jet Airways.
All right, Vishy, thank you for that perspective. Ajay Attorney now joins us. He's editor live from a lounge.com, and he's been, of course, tracking the aviation space very, very closely. Ajay, great to chat with you on NDTV Profit. Now, is this the end of woes for Jet? Can we see it flying again, or how much more? How much more before you see this revival? Because there have been n number of attempts, haven't they?
Yeah, well, I think, like your colleague just said, there is one more stumbling block to cross, and which is, what if the lenders now decide to take this to the Supreme Court? And if that happens, that's going to go in a loop again. And but whatever comes out of it will be the final answer. But for now, it looks like the NCLAT obviously accepts the provisions that Jalan Kalrock wanted to go with. And now the ball's in the lender's court if they are willing to take the residual money and kind of hand over control to the Jalan Kalrock consortium.
Okay. What does this mean in terms of what Jet has with it? I'm trying to understand the resources it now has, because even a couple of years ago, for Jalan Kalrock, apart from the brand name, most of what was valuable in Jet was gone. Its spaces, its docks, its routes, all of that now doesn't really exist anymore, doesn't it, Ajay? I'm just wondering that once this airline tries to revive, operationally, what are the challenges they're going to face?
I think there will be a lot of operational challenges. First part, what do they have remaining? The aircraft recently, 3 Boeing 777 aircraft, which were parked in some airports in India, they have been approved for sale to a Malta-based aviation firm who will basically either make freighters out of them or part them out. Jalan was kind of resisting this move because they figured it would go out of what they could recover later to restart the airline. But the money is going in an escrow account. That's what the Supreme Court said. So we'll see how that proceeds. Beyond that, I think the whole move of restarting Jet Airways was always a play on the connect that the Indian consumer had with Jet, and on the nostalgia that Jet brought back. Beyond that, beyond the brand name, I think everything would have to be started afresh anyways. New planes are needed, new management, new slot negotiations. Everything will have to be brand new.
Yeah. So put that in the current context where you have one market leader, and I just want to pull up the Interglobe stock as well while we're talking about it. You have one market leader with a dominant share. You have the Tata Group's consolidated play coming in with second place, and then a SpiceJet and others, even an Akasa with single-digit market share. Where does a Jet fit into this picture? I'm wondering, Ajay.
See, eventually, at this point of time, looking maybe 1.5 years down the line, you will only have one full service carrier left. When Air India and Vistara merge, there'll be just one full service carrier left. So there is, as the Indian market has shown, there is, I think, demand or there's a space for at least 2 or 3 premium like full service carriers, and then a lot of no-frill carriers as well. So I think if they continue with the earlier business model, which was a full service carrier one, perhaps they will be able to inch some some market share out. Beyond that, it is the usual fight for selling seats at a discount and then trying and propping up the market share in the initial years before people kind of are willing to pay a premium for that product.
All right. Thank you so much, Ajay. Always a pleasure to speak with you, Ajay Atani, on what you can expect from the jet revival. It's going to be easier said than done. This seems like the last hurdle is crossed. The googly could be if the creditors go to the Supreme Court against this. Will they spend more time on this or not remains to be seen. But anyway, the stock is up on a 5% circuit, at least as of today. Vaishali Parekh, Vice President Technical Research, is with us on the show. Vaishali, I just wanted your take on a Cipla. The counter facing some sort of pressure, quite a bit of pressure, about 2.5% down. Fundamental news over there, perhaps bogging it down. But on the charts, how do you see a Cipla right now?
Well, I'm seeing that there is some exhaustion on the stock right now. So unless and until we move past 1520, I think the stock can correct further towards 1400. Still, it is not much of a damage, but if 1400 levels break, then it calls for trouble. I mean, we would see further profit booking coming in that.
Mm-hmm. Okay, well, there is clearly, as the day has progressed, and if we can bring up the market breadth for our viewers once, because while the Nifty stayed flat, the broader end of the spectrum has been anything but flat. And look at that advance decline ratio, nearly 1:6 in favor of the decliners. And that just tells you a story of what's happened in the session today. A clutch of stocks have corrected and corrected very, very viciously in the session today. Amongst the list of stocks, and Tamanna highlighted Paisalo Digital, and that stock is down 20%, but Swan is down about 19% too. So that one has had some really strong pullback in the session today. And then there are a clutch of other small caps, which Megasoft, for example, which is down about 10% in the session today as well. A lot of stocks locked on a lower circuit. But it's 320. If we can get in some closing strategies as well, and then we'll get in some other stories going. Vaishali, if you had to take one key closing strategy, whether it's a BTST or an STBT, what would that be?
Well, as I mentioned, I'm still bullish on Tata Communication. That's looking quite convincing. And well, for a good trade, I think one cannot overlook the OMCs also, because they are holding strong. So I would like to go for HPCL. Well, throughout the day, in spite of all the choppiness, we are seeing that this stock is doing holding quite well. So HPCL could be a good BTST trade from here on.
Okay. The other stock that, we should focus on and talk about, Niraj talked about Paisalo, but let's just understand what that story is. The Delhi High Court has sought a response from RBI and SEBI on a petition probing alleged unfair lending by Paisalo Digital. Mimamsa has all the details. Yes, Mimamsa.
So Delhi High Court on Monday issued a notice to the RBI, SEBI and Paisalo Digital regarding a petition on the lender charging exorbitant interest rates and unfair lending practices. The Paisalo Digital is a non-deposit taking NBFCs, which is allegedly charging interest rates of 125% per annum, which is over three times than the most upper layer NBFCs charge. The petitioner has sought an independent inquiry into allegedly unfair lending practices. If we were to talk about the details of the claims, the petitioner had taken a loan of about 12 crore rupees from Paisalo, and a letter received in May 2019 indicated the outstanding amount of rupees 15.9 crore. Within a month, the outstanding amount escalated to over rupees 23 crore. Then in December December 2023, Pesalo Digital issued an arbitration notice to the petitioner saying that the outstanding amount of over 76.7 crore rupees is the amount that the petitioner has to pay, including late fees and charges. While SEBI has said that the lending practices by NBFCs is outside its purview, Pesalo Digital has argued that the petitioner complaint with the RBI had been closed and all the details of the loan amount and interest rates and the penalty were clear in the contractual agreement with the petitioner.
Right, thank you for that, Mimansa. Niraj, for me, this is the story of the day, because I have been asking the entire banking team that how can you, in which world can you charge 125% per annum as interest? And they tell me it's doable, it happens. If a company agrees that you can pay between 10 to 14% per month. Now, of course, the Delhi High Court has asked for a probe into it, but that's really telling you the state of, what the credit system is also looking like, isn't it?
Yeah, formal and informal both. So I remember some of those Chinese apps which were shut down by the government in 2021, if I'm not wrong.
Correct.
And the kind of interest rates that they were charging. And in the informal system, of course, one. But yeah, this is eye-opening.
This is not informal. This is
formal.
This is a company which is, has run up on the back of its rural, ingress, as in the way it's been growing. And the wealth destruction today is phenomenal. I'm also looking at what people are saying online. And as 17, 18, nearly 20% knock in a day on Pesalo is definitely hurting right now.
Just at the volumes, Tamanna, and it'll be interesting to see what the stock does tomorrow, because as we look, the sell volumes on BSE at least, 34,000 shares versus total traded quantity of 6.5. So let's see if it has the same thing tomorrow, and let's see if there is some clarity that comes in from them.
So they have put out a statement today, which I found interesting, because their statement wasn't that, no, we aren't doing, this incorrect lending or whatever. Their statement was that we haven't got an order yet. So when the High Court says something, it takes a little bit of time for the order to hit the website, etc. So that seemed a bit like, trying to find a regulatory loophole, or I would say just a bureaucratic kind of a loophole. So that's on the Pesalo side of things. But right now, in terms of regulations, in terms of court, the entire space is under so much scrutiny on every end of the spectrum. And I just want to take a minute to talk about HDFC Bank, clear winner of the day. Definitely in focus. The stock has risen in trade. Now, is this an impact of PSBs, public sector banks, losing a bit of sheen, and suddenly HDFC Bank in comparison looks better? Is it because of some of the commentary that has come in today from Citi? Remember the Citi India conference, and after that a clutch of notes, some of them talking, or one of them talking about HDFC Bank. What gives here? Harsh is joining us for more.
Well, yes, thanks for that, Tamanna. Couple of problems that I want to first highlight with regard to where HDFC Bank is concerned. One is the loan-to-deposit ratio. Normalized loan-to-deposit ratio, roughly 85%. Currently at 110%. This is one of the problems. The other problem is that as a result of this, high-cost borrowing within the balance sheet is quite large. You have roughly 21% of the balance sheet which is high-cost borrowing now on the merged entity level. Earlier was sitting at just about 8%. So as this comes down, hopefully the margins should start to go up, and that is where the problem currently lies with regard to margins. But let's talk about deposits actually. We've just done some rough math. If advances growth over the next 3 years is roughly 12% or so, and deposit growth is roughly 20%, that is when the loan to deposit ratio will actually switch. So there you go. Over the 25 to 27 period, your advances growth will come to, or rather your cumulative advances will be roughly 34 lakh crore. Your deposit growth at 20% will take it to 38 lakh crore, and therefore your loan to deposit ratio would moderate from 110 to 90%. And this is what will possibly switch your loan to deposit ratio, which is one of the key problems with regard to margins as well. I'll come straight off to what the commentary is, which is coming through from the Citi India conference. What they're suggesting is they are focusing on quality earnings, which is that replacement of, or rather slightly higher margin business. They're focusing on better margin improvement and therefore better earnings improvement. CRB, roughly 20-25% semi-urban, or rather the top semi-urban customers are currently with the bank. They will open around 900 to 950 branches. Liquidity has caused the deposit growth problem, and there are constraints on both the deposit growth as well as now will start to trickle down on the loan growth side of things as well. Now let me talk about valuations, because that's the key. 5-year average valuations are roughly price to book 3.1 times, currently at 2.5 times, which is a low, and the 1-year forward is almost at 2 times, which is a multi-decadal low. Shifting focus to earnings now though, and therefore price to earnings will come into question. 15-year median price to earnings is roughly 27 times, 5 years is 25 times, and currently just about 16 times. So looking extremely reasonable. From an earnings standpoint. If earnings are starting to come into focus, price to earnings may be the better way to look at this one.
Yeah. All right, thank you for that.
And it's interesting because usually when you use price to book, why there is a merit to look at price to earnings as well in the case of HDFC Bank this time around. Yeah. Pretty interesting stuff.
Well, let's hope for HDFC's sake that the good mood holds on, because you know what I've noticed with this counter is it depends on the mood of the market. The kind of reaction we saw after their quarterly numbers is something that they're still reeling from. But today they're having a good day. Yeah. Vaishali, quick word on HDFC just before we hit the closing.
Well, so this has been a savior, but we need a still follow-up buying above 1465. We would be looking at a target of 1520. So this stock is definitely on our radar.
And SBI, what would you say on an SBI right now?
Well, so SBI has got into a corrective mood because I think 800 was the near-term resistance. And today's profit booking, I think still some more pain is left. 740 would be a good ideal level, 740 to 730. That would be a good ideal level to again reconsider this stock.
Okay, Vaishali, we'll leave it at that. Thanks so much for taking the time out and being with us today on the show. All right, let's wrap the markets. 48 seconds left. Very quickly, get the heat map up on the screen, because we know that the Nifty is doing well or flattish, but the mid caps and small caps are not. So I'll quickly get the heat map and the losers and the gainers, at least on the large cap end. And there is clearly pain for the Adani twins. There is pain for Grasim, Cipla, SBI, ITC. So those are the stocks that are taking it on the chin, and it's only allayed by the kind of gains that HDFC Bank and IT have made, because TCS, LTI, Infi are amongst the stocks that have probably done well, and Reliance is giving company. Just lastly, get the set of BSE 500 gainers and losers with 20 seconds left for the markets to shut shop, and they will come up on a screen here. You will see the kind of losses that Swan Energy, Godfrey Phillips, Patanjali, etc. as the markets have closed. SJVN is down about 7%. We'll get the management tomorrow to talk about. And macro tech is corrected about 6%. What is done well is the likes of HEG, Linde, and some others. Tamanna.
You know, what you're showing right now is really indicative of the pain that we saw in the broader markets. Pull up the mid-cap, micro-cap, small-cap indices, and you'll see how that panned out. The micro-cap down about 2.5%. Real estate index is the other one that I would want to pull up with its key contributors, because the Nifty realty index is close to about 3% down, if I'm not mistaken, and has seen, quite a bit of a knock. Apart from a Phoenix Mills, everything else in pain. A Macrotech is not the only one on that losing side. A DLF, Godrej Properties, all of them have had a pretty tough day. Some notables today which saw a hit. We talked about Swan, we talked about Paisalo, all of them seeing deep cuts towards the end. Paisalo Digital I also found interesting because, the regulatory hangover we are talking about. Look at the news flow over the last few days. And every day it's about regulations coming in. So you're going to see maybe that overhang in the BFSI space. And if you look at why the market would like an HDFC right now, you go back to the basics. You go back to the big boys and girls when things like that happen.
Most certainly. And maybe FMCG therefore comes to the fore at some point of time. Would be interesting to look at what happens
rotationally there. Perhaps absolutely yes. Those are Jet is one I would talk about just before we wrap, because it was the story of this afternoon, and closed about 5% up. Many a slip between the cup and the lip, and for jet between the tarmac and actually getting into the skies. That we'll have to wait and see.
Yep, but on that note, from Tamanna and me and the team that has put this show together, thanks so much for tuning in.